calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. So have you capitalized on the stock market FOMO rally? What's probably one of the most unexpected bull market runs in history. Are you capitalizing on it? Well, it's set 5 milestones now. That's my most recent article. Made available to patrons. Illustrates. What's the milestone? Number 1, higher high above 34,300. Check. Santa rally. Check. Up first 5 days of January. Check. 50 days SMA cross above 200. Check. So what's the 5th one? The 5th one is an up close for January, which is gonna happen. All it needs to do is close above 33,147. That's the Dow end. Well, it's well above that now. So have you capitalized on it? What's your year to date, or are you just sat on the sidelines listening to the morons, the Cartoon Network? What is it? Mike Wilson, Clueless Wilson. Are you listening to Clueless Wilson? Waiting for the bear market to bottom when it's blooming in a raging bull market.
Mike, with that in mind, do you and the team still believe there's about 20% of downside at the index level here?
We do. We think 3,000 is a very achievable number, given our confidence on our earnings forecast. And so, ironically, I would say, in the absence of a recession, meaning companies decide to not write off aggressively, that target looks more achievable. That may sound counterintuitive, but that's the way we're modeling it today. So our bear case is actually we avoid a recession, but not the slowdown.
Right.
That would be the 3,000 scenario and $180 in earnings.
Clueless Wilson. Are you listening to Clueless Wilson? Waiting for the bear market to bottom when it's blooming in a raging bull market. As of mid-October. You've been in a bull market since. So how's your portfolio doing? As my patrons have been busy trimming this rally. I'm not buying this rally. I'm blooming trimming it. Trimming it heavy, in fact. You know what trimming means? It doesn't mean selling. It means reducing exposure to that which you bought near the lows, catching these falling knives as the market catching them during September, then October, and then on subsequent rallies, trim there and trim there to get back towards 100% invested. But for that, you're going to have to be a patron to know what it is. So let's see how my portfolio is doing. As some background, I opened Interactive Brokers ISA with 20,000 in early April. At the start of every tax year in the UK, you have a £20,000 tax-free ISA allowance, which I bunged into Interactive Brokers because they just started their ISAs. Before that, they weren't doing them, or was it that they were doing I can't remember now. I think they just started them. And they were doing SIPs, but then they stopped doing the SIPs for some reason. Anyway, how's your portfolio doing? Is it going to log me in? What's happened? It's not logged me in. This is one of the problems with it's logged me in. Look at that. Year to date, I'm up 13% compared to the Dow. Let's turn that off. No benchmark yet. So look, year to date, I'm up 13%. Whoa, what are you going to ask? What about since April? Whoa, boy, let's have a look since April. This is how the portfolio's performed. Since I started it in early April. So how's it compare? Yeah, I know what you're saying. Look, you were down in November, you were down in January, you were down in July. Well, what do you think? It's a blooming bear market. Yeah, this was a bear market at the bottom in October. Then we had that That was a blooming. The reason this drawdown is so deep is because I'm 90% invested. Well, I was 100% invested, but then on this rally, I've trimmed. You're gonna have to become a patron to know what trimming is. I trimmed there and I trimmed there. So how do I compare against the S&P? Do the year-to-dates first. Up. 13% versus 6%, so double the S&P. Well, what about Nasdaq? That's more reflective of my quality of my portfolio. Oh, it's close. Yeah, it's close. 13% versus 11%. That's pretty close. Oh, why don't you just invest in the Nasdaq then? Tracker. I'll show you why. Let's go back to the beginning. Now look at that. Over the long run, I'm up 7%. Nasdaq is down 15%. This is why index trackers are for stupid people. I'm trying to be blunt. If you invest your money in an index tracker, rather than doing the heavy lifting, the hard work of analyzing stocks and investing in stocks, this is what I do. Well, you only have to become a patron and I'll do it for you. All the heavy lifting. Well, that's the difference when you do the heavy lifting. Plus 7%, minus 14%. The difference between tracking a tracker. The difference between being invested in a tracker and not. So what about, how does it compare against the Dow? The Dow is being the strongest. Let's go back to year to date. What am I against the Dow? Dow is a strong one. Still blooming out year to date. Oh, Dow up 2% only year to date. Versus tapes. Obviously tech stocks are flying where the utilities and rest aren't. Discretionary. Look. What about since I began? It's going to be a lot closer. Ooh, a bit of crossover there, but still 7% versus 0. Basically invested in the Dow stocks. A tracker, Dow tracker be 0. S&P, huge difference. Plus 7 versus minus 3. Yeah, that's the difference between knowing what you're doing and just piling into a tracker. And as for the tech stocks, there you go. There's a huge dip. I don't understand. Because they invest in any old crap. That's the problem with the tracker. They invest in the whole lot and there's no timing. You know, when a stock's expensive, they don't invest. When a stock is cheap, they don't accumulate, as I did in Tesla. My exposure in Tesla when it collapsed just barely 2 weeks ago went up to 165% invested of target exposure. Now I'm down to, I think, 118%. That's the difference between someone who knows what they're doing and minus 15%. If I was down minus 15%, I'd be going, I'm crap. Well, this is what you get with trackers. Nasdaq tracker. Plus 7% versus minus 15%. And now I'm trimming. Whilst the herd is FOMO-ing, I'm trimming. Yeah. If you want to know more, you're going to have to become a patron. I'm not going to, it's only $4 per month. That's going to imminently rise to $5 per month. So you can lock it in now. Lock it in now, $4 per month. And if you don't like it, just stop being a patron. It's only going to cost you. People, they're so tight. For what I do, for what I deliver, this is deliver plus 7% versus being minus 15%. You cheapskate, it's going to be over $4 per month. Even 1 month it could be. Not like you're doing it forever. It could be 3 months, a year, couple of months, $8. And the difference is, if you'd been a patron and you'd roughly followed what I'm doing, because I try and share everything what I'm doing well in advance, and it's low frequency. That means there's none of this intraday movements, it's flagged well ahead. Like my buying levels and trimming levels, they don't tend to change much from month to month, let alone daily, as some so-called analysts do. You know, you have to think, whatever I do, I think in terms of how it impacts the patrons, how they will perceive it. Do they have enough time to act? Yeah, I try to flag well in advance, like such as the bear market bottom is coming between August and mid-November. That's what I flagged. That's what the image shows. You know, this image that was flagged in June. Yeah, and earlier examples exist as well. So there you go. That's the current state of my portfolio compared to the Nasdaq, which is what it most closely resembles, but not really, because obviously, look, I'm +7 and the Nasdaq's -15. Since inception, both start at 0 at the beginning. Where is it gone? Year in early April, and now +7. You know, if you can go and read the past. In fact, you can go and read the past articles to see the quality of analysis. And then for the latest, you're gonna have to become a patron, and future articles as well. That's the current state of my portfolio. Year to date is up 13% on the year. That is a massive jump. 13% is the S&P. Most people are indexed to the S&P. So most people, they are invested in the S&P type tracker funds, which is up 6% year to date, whereas 13%, so double. And since inception, when I opened this interactive broker, what's it done? I am up 7, and the S&P is basically, it's down 9. It's down 10. I'm gonna say it's flat because that looks like a 0. It's down about 10%, about 9%, call it. That is a huge deviation in performance. +7 versus -9. 16%. You have to wonder why people are obsessed with trackers. Anyway, that's the state of my portfolio year to date and since inception. This chunk of my portfolio, because it replicates my whole portfolio to some degree. Yeah, it replicates it in microcosm, but it's all in one account. Opened early April, new tax year ISA, put 20,000 in. Come April, I'm going to put another 20,000 in this. Interactive brokers is okay when their platform works, but it is a bit erratic. Yeah, it's erratic is the best word, as my previous videos illustrate, but that's the current state. You know, when I did an update barely a week ago, it was flat. Now it's up. So for immediate first access to all of my analysis and trend forecasts, and access to my Patreon community for Q&A on an ongoing basis, and where I share what I'm doing and more importantly what I expect the markets to do on a near daily basis, then do consider becoming a patron by supporting my work for just $4 per month, which will soon rise to $5 per month for new sign-ups. So lock it in now to get access to ahead of the curve analysis, as this extensive analysis of the stock market illustrates that continues on in the comments of each posted article, all for just $4 per month, which is nothing. Come on, if you can't afford $4 per month, then what are you doing watching this video? $4 is nothing. If someone did what I'm doing, then I would gladly pay $4 for it. Sign up for 1 month and you'll see what I do can't be beat by those who are charging, say, $100 per month. I'm too cheap, to tell you the truth. I should, yeah. Why? I'm just keeping my analysis accessible to all those willing to learn, because where investing is concerned, the sooner one gets going, the better. As the real secret of investing is this: portfolios compound over time. That's, you're not trading in and out like a demented rabbit, but investing and letting your portfolios compound over time. That's the real secret. $4 per month is nothing for what you get access to, which will imminently rise to $5 per month for new patrons. So at least give it a try. Read the comments, see the in-depth analysis. You won't be sorry, because I do my best by my patrons. Go the extra mile, which you will soon see. And do remember to subscribe to this YouTube channel for new videos in gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market that will ride the quantum AI megatrend into the future.